Hello traders, Richard K here from Price Action Income. Welcome back to another market geometry video. Today's topic, we'll be talking about how to navigate a volatile market. And to show you how I tend to do this, I pulled up a chart of silver here. I do believe that it's probably been one of the most volatile markets as of late, and still is. So I think this would serve as a really good example to show you how, with market geometry, combination with market geometry and patterns, how you can navigate very sharp one-directional moves, a very volatile market. And to start off this this video, I've drawn a downward sloping pitchfork and also an upward sloping pitchfork to best try to describe to you how I navigate volatile markets. Clearly what you can see here is that since this high in August last year, and this is set to a 4-hour chart, guys. So I'm doing a little bit of a different video, zooming in a bit more closer into what price is doing, and clearly it illustrates the sharp one-directional movements. It would probably be extremely difficult or scary to, for example, try to jump in here. As you know, I try to find the end of corrections using pitchforks. My go-to pitchfork when I do deal with corrections is, in the majority of the cases, the shift setting. Now, why would I want to draw a shift pitchfork here? And why would I assume that this might have been a correction? Well, for that, to answer that question, you'll have to look at what happened prior to this high over here. And clearly, silver's been in a very, very strong uptrend for most of 2020 until this high in August last year. The price recently actually broke this. There was a lot of talk about the guys on subreddits and so forth, which pumped the price in GameStop, that they were also getting into, I believe, SLV, which is the silver ETF, and they were trying to also pump this. Now, a lot of these things, you know, it has been in the news of late, but to be dead honest, whatever happened here, if that was really them, I believe the commodity markets are probably too big for guys like that to try and pump these prices. But regardless of whether they were involved in this spike that recently happened, it doesn't really matter to me. I mean, there was mega volatility prior to that. It started last year, not August already. So the first step, as you've probably seen from my previous videos, try to find the end of corrections. What happened prior to this? And it was a strong uptrend. So the first thing you should always try to do after one directional move or clear trend is to assume that when price is moving opposite to what the main trend is doing, in this case upwards, that you're most likely dealing with a correction. And as you also probably seen from my previous videos, once you have a sharp move to the downside, always assume that you will get some sort of bounce, in this case a bullish bounce, create a lower high, and then assume that price could break this low again. And it's at this stage, when price moves sharply downwards, that you would have drawn this blue shift pitchfork on my chart here. Now, this is where I get to how do you deal with volatility. And like I've said, look at this drop here. It was straight down like a stone. The thing is, if you did get into a trade like this, you'll more than likely, if you manage to get in somewhere here, or maybe even late when price broke the support sort of area over here, if you were short there, great. But if you weren't, and this is why I use market geometry to define price action, or price structure as well, is that you definitely do not want to be short anymore when price reaches one of these median lines. In this case, assuming that we had a drop, and this was probably just 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5 somehow. Very difficult to apply Elliott wave when you have very strong one directional moves, and this is exactly why pitchforks work great. whether it's a volatile market or a market that's not that volatile. So if you were somehow short, you had a strategy. Remember, I also use the pitchforks and my median lines or even channels at some stages in combination with pattern recognition. So if you can define the movement of price, understand how patterns develop, and also know how waves work, then if you were short, great here, but that's obviously why you need a strategy. But what I'm getting to is, yes, this was a strong move. If you weren't in this trade to the downside and assumed that this was only a correction, then you probably would have been looking for some sort of opportunity for support to come in here and then buy this market to the upside. Yes, it's been extremely, zigzaggy to the upside. But in any case, what I'm just trying to say is that, yes, it can be scary with a drop like that. But assuming that we are an uptrend, we have a correction, you would then know that although things have been volatile, that this is probably where support's gonna step in. In very volatile cases, you'll quite often see, and this was volatile, but even if price dropped lower, this is why I have these lower red warning lines and upper red warning lines, depending on which direction you draw the pitchfork, that very often will also stop price in its track, in cases where it would, let's say, just slice through this lower median line, which in this case obviously didn't happen. Quite often a good idea just to use a shift pitchfork, in some cases a modified shift pitchfork, or a channel sloping in a direction downwards, because corrections tend to be less, I'm going to say, angled, or doesn't have a steep angle as a trend would. For example, look at this move over here. Very, very strong move to the upside, assuming a correction would be the go-to pitchfork is a shift pitchfork. There were even other, let me just draw that in for you, another way that you could have just drawn a pitchfork sloping into the direction of the strong downwards move, because this one is a much larger pattern. You think you're dealing with an A, possibly a C wave here. You want to be angling another pitchfork from a shorter period of time into the direction of this move lower. And although price overshot this lower median line of this standard pitchfork moving to the downside, you could have created a zone there and definitely would not still be short as price approached this. And this is why pitchforks work so great to define any market condition, even if it's very volatile. And this brings me to this pitchfork sloping to the upside over here. Price overshot this, and this is a standard pitchfork, and all I really did here was use 3 prominent pivot points prior to this move to the upside. And a standard pitchfork, although price overshot there, similar to what happened over here, it undershot here and overshot this median line to the upside. It just gives you a really good indication of what happens when price actually reaches these important lines, which is either, in this case, an upward market, would be an upper median line, and downward sloping or downward moving market, you quite often have your lower median line, and in extreme cases, your lower red warning line. So although price actually did move within confines of this market to the upside, it failed to break or reach this upper median line. But when it did for the first time, it actually moved lower again. So this brings me again to the situation of when you, let's say, were long this market, that you definitely do not want to be long anymore as soon as price approaches one of these strong resistance, in this case a median line, upper median line. And then one strong drop down to the downside again. Can be very volatile or difficult to navigate these markets, especially when things get zigzaggy like this. But if you have some sort of a bias of where price might be heading to, then pitchforks and sometimes channel lines, in my opinion, probably the best tools to use to navigate a volatile market. Here's a really good example where I left this blue downward sloping one that caught the end of this correction, because price did eventually break this high again. So this was some sort of correction. Maybe this is correcting. Now we're getting another move down. Who knows? We'll just have to wait and see. But if you left this pitchfork on your chart, then quite often you'll find that price continuously respects it. And we went up, it came down, find support twice, up, support, support, and moved upwards to follow this pitchfork pretty well. Alright guys, obviously you need a strategy to navigate these markets. You need to understand how patterns work. There are various patterns that I do follow. I follow single zigzags. In this case it was a single zigzag. Quite often when I always anticipate that a single zigzag is firstly underway, when I am thinking that I'm dealing with a correction, my next go-to one after that, if I was proven wrong, let's say price went down A, B, C, and it went up again and would break this low again, then I would then go to a double zigzag, which works A, B, C's. You have an X wave, and let's say we have another ABC to the downside. That's the two major patterns. Another one that I follow, obviously triangles. You've probably seen some of my videos on triangles. There's probably a little one over here. There are different ways to determine when you're dealing with a triangle. You have different triangles, like ascending triangles or descending triangles, symmetrical triangles, and one that I've recently shown a lot of my videos are expanding triangles with very, very volatile sort of patterns. But there are different ways that I approach these using market geometry, almost tailored for each specific pattern. Then I also have expanding flats, also a very volatile pattern that I follow, and I even have ways that I try to navigate those. But the only way that you can figure out what you might be dealing with is to understand how these patterns work and make serious study of it. And if you are interested in any sort of more information about how patterns work, then please go check out the link in the description below this video and find out a bit more about these services that we do offer, which can really help you out to understand how price action works in a defined and systematic way. Anyway, guys, also want to thank you all for subscribing. If you haven't done so before, please do subscribe, and also leave some comments down in the section below. I always try to reply to you guys. Thanks very much for those that have left comments, and I always try to cover videos if you want me to have a look at something next time around. In any case, guys, it is Friday here in Cape Town today. I hope you have a great weekend, and until next week, have a fantastic day. Goodbye.